Hello, everybody. Thank you for joining me. My name is Stefen Choy, and this is Trading with Livevol. This is where I use Livevol X trading platform to trade my own Reg T account, and then you guys can follow what I do and how I use the product. Now, I just gotta let you guys know. Usually, I do at least try to prep up like 10-15 minutes before I go on, just to know what I'm talking about. But I just got in the office just now, and I booted it up, and I'm pretty much kind of doing this for the first time. My parents came to visit my 1-month-old son, and I took him back to the airport. But in any case, they're very happy. Obviously, I don't know for the Asian family. Especially in my dad's generation, it's very important that your lineage continues. So this is kind of something that he was very happy to do. As for myself, boy, girl, I have one girl, one boy. I love them just as much, and like that kind of stuff. I think for the younger generation doesn't really mean as much. But for my dad, I was very happy. It was the first time he saw his grandson. And today, he went home happy, so I'm pretty happy. So let's go right to our account. Looks like we're having another bad day, but mostly just in ZNGA. So it seems like basically my position has stabilized, except for ZNGA, and it's something probably I will address a little later. But let me actually go through some of my other positions. So if you look at the trading, you'll see that I'm down in Apple today, right? But I'm actually not that worried. I'm actually pretty optimistic because, as you guys know, I did this butterfly, right? The 525, 530, 535 butterfly in Apple last week, hoping that it gets pinned at 30, and I think I paid 75 cents. But basically, I thought it was pretty much out of the range when I thought Apple broke out. I think yesterday. But I come back after the broadcast. I do some other stuff, meet with some folks. I come back and I see that Apple is down, which was like, when did this happen? But in any case, now these 525, 530, 535 butterfly might be back in play. So, and I'm not really that concerned about my other call spreads. The one thing I did take off, I don't know if I mentioned it on the broadcast, but I did buy some 10 calls for like 340, and then I had to punt them yesterday just before the close because here it is. I punted it for 220 just because, I lost like 1,000, I think 1,100 bucks. I punted it just because it didn't happen like I thought it was gonna happen, right? So it was like a false breakout. So I thought it broke out, but it basically this was the day, and it basically head faked me and then went back down. So if I'm wrong, what's the point of keeping it, right? So this could be still part of, you could almost make an argument that it was still within the range of the wedging process. So I'm just gonna leave it, but I think there's some probably good upside. So I'm gonna wait to get my money back on that next time it does break out. But sometimes I do that, take a shot. If it doesn't work out right away, I just kill it, and then I try to load up for the next one. So yeah, so even though I'm down in Apple, I'm not actually that disappointed. In fact, I almost feel like I might get another buying opportunity if it falls back down to the 520 range. So I think I am interested in maybe doing some more spreads. And I know Apple has earnings coming up on April 22nd after market. not sure if that's going to be actually great earnings, because from everything I read, it doesn't really look like they're doing that great this quarter. I could be wrong, but all the sales and stuff like that doesn't seem that great. So, maybe I will have to address that before this earnings date, whether I want to keep this spread, because this spread could literally, if you guys were trading Apple last earnings, it could literally go from whatever price to zero if Apple starts dropping another 40, $50. But I think that chances are less just because it happened last time. So if it happens again, I think the buyers will step in faster, and the shorts won't be as quick to just start selling, just because they got bit once. So I think it'll be a little more tamer this time around, the movement. But I still I'm going to have this risk in May, and maybe what I'm thinking is like, yeah, I'm willing to take that risk because if you look at it, it's April 22nd after market. Mays are still a month away, so even after that initial sell-off, it might not be that big of a factor. So like you see how like if you look at it, February, like this is when they had earnings, right? And then literally a month later, it was trading almost right back to where the pre-earnings announcement. So it could happen again this time. So I'm not like that. I'm not like crazy worried about the fact that it's an earnings month, but I am. I do have to consider it when I'm doing my thinking. So, one of the things that my dad wanted to do was start looking at long-term investments. It's kind of difficult for me to look at long-term investment, I guess, just because I see everything in short term. I guess for me, Apple is kind of like, I was checking Apple because they were making so many analogies of Apple to Microsoft. I don't know if you guys remember, and the young guys won't, but for the older guys like myself, Microsoft used to be, well, it's so far back. It used to be like the Facebook, used to be like the Google. So it was like before all those. It was like it wasn't like the established company. It was actually the hip company, right? So in 2000, basically it had this huge run up, and then as soon as like basically their growth, and they, whatever, they missed the internet search, whatever it is, basically, if you can see, like after that initial sell-off, they've been grinding for like pretty much the last 13 years, and then it's starting to break out. So maybe, I think if I was just looking at Microsoft, there might be a decent chance that this will keep going up, but this it consolidated for such a long time. But as you can see, if you think like this is what happens to a company once it matures, so you see this run up, tremendous run up in the 90s when Microsoft was pretty much becoming the 800-pound gorilla. But once you become the 800-pound gorilla, it's a lot tougher to grow, and then basically they miss a couple of new innovations, and then they're here, right? So if you're saying like, hey, what's up with Apple, right? So if you look at Apple, this could be like the 90s for Microsoft, and if for whatever reason, and just so you know, fundamentally it's not exactly the same, but just as you know, if you think of Apple as just more of a mature company and they're going to keep producing good products, but maybe not as innovative or cool, it might actually just kind of like hang out here for the next 10 years. But I think, in terms of, and so that's what I was trying to compare it with. I don't think it's exactly the same, so I'm kind of leaving it a little open. I think Apple has more variance just because they're in like a category of consumer products, and consumers are very fickle. So even though it's almost unthinkable that Apple could be replaced by any one company, that could happen, and I think people should be ready for it. But that being said, I'm still bullish just because just financially they have so much leverage to actually push this stock higher. And if they do anything on the innovative side, such as copy Samsung pretty much on the large screen space, I think they're gonna do okay. So I'm gonna, the reason I said all that is I think I generally like this call spread. So I'm gonna keep doing these call spreads in Apple maybe throughout the whole year, just because I think I kind of like the idea, right? So I was thinking about it, and I'm like, this is pretty good. Basically, I make money if Apple stays the same, and I make money if Apple goes up. Once in a while, it's not going to happen, but if you just keep doing that for the whole year, I think you'll end up more in the plus than in the negative. My other stock is RSX. So I sold these puts here for 85 cents, and I told you guys about all this other stuff. So, I was looking back at it the other day, especially this, like the market sold off, and I'm like thinking like, well, what are the chances it goes back down here? And there's a decent chance. So I was thinking maybe. And then there's the same amount of chance I think that it goes up. So it's kind of like a toss-up right now. So at this point, I'm almost hesitant just to keep this on without keeping an eye on it. Maybe selling the 22s might be the right move. But maybe this can give me a little boost here back to the 24 range, and I'll take this off. But in either case, like I looked at it and it didn't look as safe as it was before. So I'll see what happens. Okay, so the next one, let's see what I have here. So like I said, I didn't have time to prep. I'm kind of just going through this. Oh, the VIX. Yeah, so the VIX. So I think the VIX, I bought these. I bought this call spread because as protection, just because if something crazy happened, then the VIX had a huge pop. Basically, this was going to hedge my whole position. Now I feel like there's less chance of that happening, even though it could. So if you look at the VIX chart, it's kind of like it's almost like kind of consolidating itself and waiting for a move. Now, my thinking is, even though for the next month, I'm not sure if it's going to go up, but I think this trend here is generally to the upside. So I think we're going to have another huge spike in the VIX at some point. I'm just not sure that my VIX is going to work. And I was thinking maybe one of the ways I should maybe try to play it is maybe just sell, maybe the 15 puts. If I think like generally it doesn't have that much on the downside, but it has more on the upside, maybe I can just roll and keep selling the puts and try to take this off a little bit. But I'll see what happens. Usually I get like I look at my position, I go home, and even though you're not actively thinking about your position, you're kind of passively thinking about it. And I don't know if that happens with other guys, but I'm reading articles, I look at the news, I'm thinking about like my profit and loss, all the trades I did, and during that time, like you'll kind of start formulating like maybe some kind of strategy that you should do going forward. EEM, so as you guys know, I'm trying to like do some like the strangle selling naked, and I'm not sure exactly, like these two are now in the money, so it's not really what you wanted to happen, but it's still like overall less than $100, so it's kind of a learning experience. Maybe I can roll it up to the next strike. You see how like it's here, I can roll it to the 450s, but I'm not really that comfortable doing it. You can see the 40 and a halves. People are buying them this morning, and then in the past hour or so, most of the people have been selling. So we'll see what happens. But it's interesting. I think there is some things to be done where you can sell naked calls and puts on the indexes, and I'm gonna try to figure out how. So that's so the thing I want to talk about also is this general market. So you know, you see how like if you look at the weeklies, basically like almost nothing is happening. It's just wedging in there, right? It's just consolidating. I mean, like this if you saw this pattern and you saw this like consolidation, basically you would think like it's gonna go back up. It's almost like a non-event, right? But if you look at all the if you're like doing day trading, this might been a pretty bad time period just because like you have like one confirmation that you think it's going to go up and then it reverses and basically it's just going sideways. So maybe the guys who actually are playing this band is probably doing the best instead of taking one viewpoint or another. So I had some really good guests come to me yesterday, and we had a good talk. They had some ideas and questions about Livevol X and how I use it to trade. And I think a lot of the times people are asking me, well, how, what's the difference between being a market maker and being a retail trader? And and I touched on this before. The biggest thing is just generally you don't have the margin. So and you can't spread out your position. So what I was telling those guys is I would have like 150 positions in like different positions, and generally what I was trying to do, and I'll go to my account. You see this this gamma and theta. I was trying to get positive theta and positive gamma. So you see how like right now I have this positive theta, so it's theoretically saying I'm collecting, but if the market moved, I actually have enough gamma to basically make money, right? So it's and it's not, just so you guys know, this isn't like perfect. So it's not like fail safe because one of your stocks can like implode or explode. That could really hurt you when doing this kind of strategy, right? But overall, what you're doing is you're basically harvesting premium each month. So if nothing happens with the market, you actually collect theta, right? And then I was using that collection of theta and buying low volatility option, which made my gammas go up. So I sold high volatility options and I bought low volatility option, and I offset it. And if they kind of revert back to the mean, and the market moves in sync, as a general rule, you should actually make money, right? So that's kind of how I traded, and it was extremely successful. And it is why, to me, not having the volatility information is kind of crucial, right? So you should have this information so you can actually know which one is at high vol and at what stage of the volatility it is at, right? And then also you need to understand the order flow information just to see if it's going to back you up, right? So basically you're doing all this to increase your percentages by just a slight bit, so you can and that could actually make the difference between you becoming a millionaire trading or like you basically blowing out. And I know like few percentages here and there doesn't seem to make difference, but if you compound it and if you do hundreds of trades or thousands of trades over the course of your trading time period, it can make a gigantic difference. So everything in this software is to give you that little edge. So what you're doing is you're figuring stuff out that's high vol, and seeing, okay, well, this is like extremely high vol. What are the chances this blue line right here, the historical volatility, is going to move at this 34 level going forward, right? Because this is indicating what's going to happen in the future. The blue line, the historical volatility, is kind of telling us what happened in the past. And so, at this point, and let me actually shorten it, if you think that the historical vol is going to trade much lower than this red line, so this blue line is going to trade much lower than the red line, you would be a seller of volatility as a professional or even as regular person, because you're saying that the stock is not going to move enough to justify selling these options for owning these options for this higher price, right? So that's kind of what you're doing. Now, if it's this close, I would say it's better to own options. And the reason I say that is this historical volatility is measured from end of day to end of day. It doesn't actually take into consideration the crazy swings that happens intraday. So when it's close like this, generally it's better to buy than sell. So if somebody had to say like, hey, Stefan, looking at this, is it better to own the straddle or sell the straddle? I would say right now it's better to own the straddle than to sell it. But at some point you might actually, like at this point right here, when you sold volatility here, it was far better selling volatility than buying. Now, normally what I would do is, let's say I think this vol is too high right here. I would just sell options. Like I would sell calls, puts, it didn't matter. And basically I would hedge it delta neutral with the stock. Now, for those of you who don't understand what I'm saying, just kind of go to whatever book you guys have on options or some website and look up hedging delta neutral. And basically what you're doing is, by hedging your option position, you are just basically turning calls into puts and puts into calls synthetically, and that's kind of how you manage and you balance it. So you're always like front spread, which is where you're short the same amount of calls and puts, right? So you're like sitting at the peak of the triangle. So that's what I was would do. But obviously that doesn't work with the Reg T account. So I can't just go like, oh yeah, I think the vol's low, I'm just gonna load up and then scalp stock and make my money that way. So I think what you can do is maybe do strategies, and let me actually try to tighten this one. Maybe try to do strategies where you are, where you're like here and you're like, it's trading 40, 48, so you sell like the 41, 43 call spread or something, even though the vol's low, because the vol's low, it's like an inverse indicator or something, right? But I'm not sure if that would actually work. But you do that, and then if it goes down, you sell the put spread. Just from looking at some of the successful, or the most successful person, at least according to the websites, that person seems to kind of sell the legs separately on the indices, which it's a general idea that I think that I never really thought about before, but I think it's a pretty good idea, especially if you're not a professional and you can't really hedge it delta neutral. What's the point of selling it all at once? You might as well leg into a good strangle, a good condor, or a good butterfly or whatever. But that's just me right now. Also, I get sometimes asked questions about trading. So I basically, it looks like I lost about 20% of my account, and the question is like, hey, am I worried? My thinking is I'm not worried. I'm disappointed. No one wants to lose money, but my thinking is every day that goes by, I'm learning, right? So every day that goes by, I'm learning. If I am around 50,000 by end of this year, I can pretty much say that my chances of making money going forward after that year is going to be huge. So for those of you guys who are like jumping in and thinking like, oh, try a couple of things, it doesn't work, and you're like, damn, this doesn't work, this sucks, I'm out. That's not actually how you should view it. It's kind of like the survival of the fittest. If you can survive, right, the first year when you know the least amount of, let's say, option knowledge, right? When you know least about, like, for me, let's say least about how to trade the Reg T account, the margins, what kind of strategies work as a Reg T account, what it doesn't, pretty much making every kind of mistake possible, and I can still break even by the end of the year, yeah, you're not going to make the same mistakes going forward. So if you survive that 1 year, you probably have a tremendous chance of having a really good career going forward, right? So for those of you guys out there thinking like you can actually start trading and like just because you didn't make money right at the beginning, it's against you, don't think of it that way. Of course you want to make money. You're always trying to make money. So for those of you guys who are having instant success right away, fantastic, you know, keep it up. For those of you guys who are not doing as well, you know, don't give up or cry about it. It's not a big deal. It happens to everyone. It's kind of why I wanted to kind of get on the video and show people and track my trading live, right? That way there's no real place to hide. So if I'm losing, I'm losing. If I'm making, I'm making. And there are reasons why things are happening. And you guys can actually see all the things that happens in between. So let's say I started off, and this is completely hypothetical, but let's say I started off with 50,000, right, while I broadcasted. And let's say at the end of the year, let's say I ended up with like 55,000, made 10%, right? If I just showed you my P&L going from 50,000 to 55,000 and made 10%, people would say, you know, 10%, that's not great. You know, he must not know what he's talking about on trading, or whatever strategies he's using must not be working. But I think you're kind of missing the point. It's the journey, and it's the pain and the joy that you have in between, and how you deal with it is how you, in the end, is going to determine what kind of trader you're going to be, right? It's not always going to be rosy. In fact, sometimes, like when I started off the best, I had my worst performance just because, you know, you kind of get, it's human nature to become lax, become more greedy when you're doing well, and that kind of sometimes backfires. Sometimes when you get your butt handed to you at the beginning, you can kind of, you know, it can kind of strengthen you, and if you survive, it makes you that much better. So for me, like, let me see the summary. So you see basically, like, I actually was up, I think like $7,000-8,000. So I'm gonna actually go here. So 21. Right. So I was actually up 7,000 when I started the broadcast, and now I'm down 9,000. So you know, maybe at this time I was not maybe doing my best trading, and I wasn't formulating, because I wasn't really formulating new strategies. So my thinking now, because I had to verbalize yesterday what I wanted to do, or what I should do, was this basically, what this means, having your portfolio where your theta is positive and your gamma is positive, is what I'm trying to do is generally I'm going to try to sell some high premium options that I think is a good sell, and I'm going to use that money, and I'm going to pretty much take my shots on positions that I think is going to make money, right? So that way, if you break, if your shots don't work out, then you stay flat. If you if it does work out, then it's fantastic. But you know, the hardest thing about having these accounts is money gets sucked out of your account day after day, right? So if you own options, you have this decay, so it's really going against you. So for most people who start out, buying options is pretty much a very, very difficult way for you to be a successful trader, unless you have some huge advantages and that you're very good at technical fund, like whatever it is that you're doing, you're very strong at it, and you can actually overcome the fact that you don't know that much about, you know, options and the volatility and stuff like that. So you have to go through all those mistakes and still make money, which makes you like pretty much a pretty incredible trader. But for most of the folks, is you start buying and then you start realizing, like, man, this buying options really sucks, right? So you actually start thinking, like, maybe I should sell, because that way I win 2 out of 3 times, right? I win if the market goes in the direction I think it's going. I win if the market stays the same because you sold premium, and then I only lose if it goes against me, right? So it is a very good strategy. So it's why most of the successful traders kind of go from buying options to selling options, and there are people who will never buy options whatsoever. Like even professionals, they're not big into buying. They're always going to be front spread because they want to go home on the weekend, know that they come back on Monday and they're up like $50,000, right? So they're always going to sell. So for me, what I am kind of learning right now is trying to figure out how to do similar things I was doing down there, but with the limitations that I have. And I think there are ways that you can do it, but I need to figure them out. The thing with me is sometimes I have to figure it out the hard way, not the easiest way, but it's gonna basically, I'll figure it out. So I did get asked yesterday by one of my co-workers why the hell I'm still in Zynga when it looks like it's just getting pummeled, right? So I lost so much, but why, Stefan? Why are you still in this dog, right? And my thinking is because when I look at what happened, and right now I'm still trying to piece it together, and it's always easier to piece it together after the fact. But let's say it looks like King Digital is like pretty much trading flat. I think it was down a little bit earlier, and that's the Candy Crush. If you compare that company to Zynga, you can almost make an argument that like, hey, Zynga is not worth as much as Candy Crush, or maybe if you had X number of cash in your fund to allocate, maybe you're pulling some out and putting into King Digital just to be safer, right? That way you're in the mobile gaming, invested, but you're split between Zynga and Glue and maybe King. But those are all like my speculation. I don't know. I do know that when I look at when I look at this, and this doesn't happen every day, but when I look at it, there continuously seem to be heavy buying of the out of money calls in Zynga. So what you might actually take from that is, oh, Stefan, I used to do this all the time, buy upside calls and short the stock. But I don't think this is as much of a case this time around. I do see like a lot of selling, so people just don't think this stock is gonna go anywhere except maybe down, right? So they're selling, but now they're selling puts, selling calls. There's some call buying. So there's 15,000 for 24 cents on Philly. The May 17.5 calls, I wouldn't know until tomorrow. You see there's open interest. So you see how like in the past 2 days, the open interest has been increasing. So there's still people who want to go in and buy these, right? Or sell them, or whatever it is. But basically, there's interest in this 5 line, and there seems to be great interest in these upside calls, right? So the 6 line, right? So this open interest keeps going up, and then the 7 line seems to be 6 line here in June. You see the open interest going up. The puts are going up as well, and then you see these as well, January 7th, and they're always coming in buying these, right? So the fact that they're buying so many upside calls, and I have a strategy in terms of what I think. So just to share that strategy with you, I think there's going to be a bounce before the earnings. So there'll be some kind of huge bounce on Zynga. Just because it's kind of done that in the past. So it sold off, and then there's this big bounce at the earnings announcement. But it's a very directional stock. So you see like it was selling off here, and it almost looked like it could actually really go back down, revisit 3, but then it kind of shot up and went from 340 to basically 440, $1, like a 33% move like within 2 weeks, right? So that can happen here, and I just want to be ready, oops, and make sure that I am actually prepared. So what I'm doing is I am buying the April 4.5 and selling these 5 puts, right? So what I'm trying to do is I'm going to do a put spread, but I'm doing it on different strikes, right? So I'm doing the 4.5, which is the at the monies. I'm buying those and I'm selling the in the monies and hoping one of these days I'll have this like huge like bounce. Even if it doesn't go back up to where it was, let's say it just bounces back to what is the 50 plate? Let me actually. So if ooh, right, so from here, high of like 590 roughly, and right now it's low of 430, right? That's 70. 160, so 80 cents higher. Yeah, so it could retrace like about 50%, and it'll be around 5-10 range or something, right? It already kind of did that here, but it wasn't 50%. Now, if it retraces back, it would be 50%. So it could happen. So I'm thinking my bet is that it'll happen in one of these next 3 weeks, and I'm gonna keep buying these, right? So I'm gonna keep selling these and rolling, and waiting for one of these to go up. So yesterday or the other day, I think I did more for, like you see here, I did it for, I sold some more for 18 cents. So I bought the 4.5, sold the 5s, and I'm gonna, let's see what they are today. Boom, boom. Yeah, so they're basically 24 cents at 30, right? Or 24 is the fair value. So if that's the case, I would like to do more, and I'll do it for 28 cents, right? So I'm gonna do more for 28, and I'm gonna, oh, hold on 1 second. I need to check this because my, okay, so I still have 11,000 in my margin. So I was telling you yesterday, the other day about my margin, and I wasn't keeping track of it, and literally like I was doing like 2 lots in C's, and it was taking up 2,000 in margin. So I just want to make sure I had enough. I'm gonna send this order at 28 cents, and I'm basically just keep doubling up. So it's almost like my whole thinking is it's not gonna stay here throughout the next 3 weeks. Either it's gonna rip up or it's just gonna rip down, and if it does, then basically those 2 that I did spread, they're worth 50 cents instead of 30 or 18 or 25 that I'm selling it at. So I'll lose that spread up to 50 cents. But if this thing bounces back up, basically the 5 puts, because I'm doing the front month weekly, will go to 0, and these 4.5 puts that I own 3 weeks out won't go to 0. So and they're higher delta, so that will go down faster. So let's say I do that. What does that mean? So when I look up, so I was looking at my risk chart, right? So 25% up and down. See, I'm still have about 2,500 at risk, right? But if it's correct, and these are not just from that call put spread, but all the calls that I own. But if it does go back up to like $5, I should make around 3 grand, provided it happened like in the next 8 days. So I'm gonna keep doing it. I'm actually tempted to put a lot. Like if I was down on the floor, if I had a bigger account, I would put this on a lot right now because I'm pretty confident that this trade will work, or I have a confident that this trade will work out, good chance of it working out. So I'm gonna keep piling it on, and I think it's gonna work out because my belief is that ZNGA is gonna have a bounce, right? Sometimes I talk about the skew chart as well. So let me actually go to that just for those of you guys who are not looking at it or haven't seen it before. So you see how the stock is trading 4.5. This yellow line is the April expiration skew chart. This green line is the 19, May, and June. So if you look at the monies, these are the at the monies, right? So normally what happens is the puts, usually if you look at other stocks, and I'll kind of use this example going, with the other stocks, but usually the puts have a higher volatility than the upside calls. So like if the at the money may, let's actually use this April, right? The April 4 or the June 21 or the May 17. These are the at the money vol right here. You can see if you toggle over it, right? So the May 17 at the money is trading 63 vol, right? The strike that's below it, the 4 is trading also 63 vol. You see how it's the same? So it flattened out the skew, but the 5 calls are trading 68 vol. Now you see how like this is not a normal skew, right? The puts, because the market goes down faster than up, the put should have a higher skew than the call. So when I see the skew, and I see it like constantly in Zynga, it means people are betting more on the upside. The premium on the upside is higher. So maybe there's something going on that I'm not knowing, and I just, I don't feel like taking it up, because as long as these kind of indicators like the skew, like the order flow, fundamental news that I'm reading, and all the stuff that happened in the past all put together makes me think that this company is not something that's going to go down, but they are working on stuff to make it better. So that's why I'm staying with it, and I'm being stubborn about it, because my belief is still the same. So if I walked into this stock today with no position whatsoever, I would still be bullish. So when I have that kind of opinion, I'm just going to stay with it. One thing that I think maybe I could do that would make a difference is not have this position be basically my whole portfolio, right? So like in the last, like basically out of all the money I lost, I can pretty much put 75–80% of that loss into Zynga. So that's might be too much to actually kind of like have your weighting on one stock be so heavy. But I can adjust for that going forward. But in the end, that's what I'm thinking, right? So I'm gonna stick with it. I'm gonna keep doing it because I believe in it. I wouldn't do it if I didn't believe in it. So I'm just gonna keep piling on and see what happens. Now, one thing I do want to make sure let you guys know is these are better done in Monday as versus like now on, what is it, like Thursday, right? Because and that's why I put it so high, because there's no premium in these. So the only way you're going to get filled on this is an intrinsic and probably worse. So it's not really that great. So you're picking bottom. But if you look at week out, there's still some premium left in the 5s, like 5 cents worth. So even if the stock stayed exactly the same, you should collect 5 cents. And if you did it, let's say 100 times, you should collect 5 times 100, which is $500, right? So that is why I'm sticking with Zynga. I do have a couple of other position. Axel, let me just review it real quick. Yeah, so it's not really working out that great, but we'll see. It's only a 5 lot for me right now, so it's not that big a deal. But yeah, I'll keep track on it. It's funny, like this is the second day, like morning. I woke up this morning and I think the market was up like 10 minutes in or something like that, like at the beginning of the day, and then I come back to the office and the market's down. So, I know people are worried about maybe the market selling off, and this is the big sell-off that people are waiting for. But really, and I'm gonna go to the weakest again. Basically, if you look at this chart, you wouldn't even know anything is going on. You would actually think this whole time period is a complete dead time period if I showed you in the past what happened, right? So it's like So like all this hoopla and all this like news event that this whole thing is happening, really, if you just look at the movement in the SPX, it's almost like they're not even taking any of that seriously in any way, shape, or form. And basically, the news right now is balanced. So what people are agreeing on is that the S&P is roughly like like 1840 to 1880 or something. That's the fair range. What they don't are thinking is whether that's a buy or a short. So we'll see what happens going forward. I think, I just kind of like following the trend unless it tells me otherwise. Right now, this trend is still bullish. So unless like something tells me otherwise, you know, I would just stay on, right? Staying bullish. There's no reason to fight this whole thing. If I fought this whole thing, I would have been fighting it for the past 4 years, and I'm sure that would have been a losing battle, right? Okay. So I didn't talk about too much trading today because I just got in. Send me emails to community@livevol.com. I mean, community@livevol.com. It's the email address. Go ahead and send some comments, maybe some stocks that I'm not even looking at that you guys might want to cover. Go ahead and shoot me an email, and then maybe I'll have a segment where I just kind of cover stocks that I'm not trading, but people are wanting me to look at what the order flow is like and such. So have a great day trading, and talk to you guys tomorrow.